Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Hey Friday, what's up everybody? Hope you're having an amazing Friday morning. Welcome to the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to do what we do each and every day, taking a look at the same 10 to 12 futures markets for potential breakouts and reversal opportunities. Let's dive. Now, a couple of things real quick about today's markets. We don't have a whole lot happening, right? So if I look at my S&P, we're up about 7 points this morning, but we're still between our major areas of demand and supply. Not a whole lot has occurred in here over the last few days. A lot of just sideways chop as we're heading into the weekend, looking at a potential G20 summit, movement. And I'm a little fearful about a potential gap risk over a weekend. So we are sitting at this area here where we've fallen away from there once, we've hit it a second time, and now we're in there a third time, which would normally end in an opportunity for a breakout to the upside. So, you can look at this area right here if you want to draw a line there. If you're a little bit more aggressive, you might want to do it a bit higher. You can wait till it gets up to here. We would need a bit more basing in front of that level, but this would be a potential is a breakout above this 2940 up to this 2948 region. So keep an eye on this one to see if this one's going to make is going to reach your criteria for entry, as we have had a little bit of a move up through here. But ultimately, we are it's still anything out in between these areas of supply and demand is a little bit in the middle, right? And so it's slightly lower probability, a little bit more risk. So just gauge your own risk accordingly. And then certainly heading in over the weekend, what are we going to do as far as protections? So that's the level in the S&P. In the Nasdaq, looking at a very similar price action, we came really close to this demand area. Unfortunately, it didn't quite get filled, and then has moved away from there pretty well. The Nasdaq is actually not quite looking the same. It's got a little bit more. It's got one more touch that we have to have above here before it would be the breakout area. So that's what makes me a little bit concerned about the S&P level, is that the Nasdaq hasn't officially broken out yet. So and then keep in mind, when we do get the breakout, you don't have very much as far as room to roam with the supply area up above. Now, this supply area up above technically is lower probability, right? And the reason it's lower probability is because our big picture is still up. I have a lower swing low. I don't necessarily have a lower swing high. And so same thing in the ES. I have a lower swing low. I don't necessarily have a lower swing high. So the ES technically still in an upward trend. So the supply level may not be overly strong on either one of these. So keep an eye on that on the breakout. For me, I think sometimes patience is going to be the better part of valor, and not forcing the trade. But if that fits your rules, then feel free to go in with that. My thoughts on that are that I'm not sure that the reward to risk is going to be there. So we'll see what kind of basing I get as it comes into that level, and I might even slide down to like the 15-minute time frame in order to minimize my overall exposure. So kind of keep that in mind as a potential. Looking at crude oil. So yesterday in crude oil, we were looking at, or actually earlier in the week, we looked at a breakout above here, and we got a nice little run out of that breakout. And then yesterday in our live trade room, we looked at possibly getting short on a breakdown below this level again. So we're chopping in between that level. I would need to see some basing in front of it, and then that would be the opportunity for a breakout below that line with a target down here at this 57.98, 58 area, moving down from this zone. So that one is still very much in play without anything really changing on that one. So now let's take a look over at the gold markets. And when I look at gold yesterday, I felt really strongly about this breakdown. I thought this was a really nice opportunity. Really good breakdown. We actually took it set up while we were in our live trade room. We looked at it as a potential on a candle-to-candle opportunity, as as we had a higher high here, and then we got a nice big move down. And then all of a sudden, it completely went against us. By the way, that's going to happen, right? You're going to get those opportunities from time to time that do that. I still think this level's pretty good, and I'm okay with the fact that it went against me because I follow the rules in the setup. It had 3 touches for a potential breakdown, right? Touch number 1, touch number 2, touch number 3. It was a former area of demand on this rally up. All the rules said, hey, this is a pretty good opportunity for a breakdown. It just didn't hold to fruition. I will still keep an eye on this, though, going forward. I think that we still could get a breakdown out of that level. You're going to have those kind of setups, especially in sideways markets, where things like that do occur. Now, in the overnights, we had a really nice retest back up into this area right here, and we're starting to get a little bit of a fall off in that region. So let's see if that continues its move lower. I think there's going to be opportunities to get short on this, I think, the whole way down. Knowing, though, that our 4-hour is still, in a bigger upward move. Part of the reason I was very much okay with getting short here is because I think there's room for it to fall all the way down to some fair price value areas. This was kind of target number 1, and this was target number 2, and so that was a pretty big reward to risk setup. And so I'll take a reward to risk setup like that goes against me because I still think that level could still have some validity and we could still get a move away from there. Next, looking at our bonds and currency markets. So the ZN, which was our bond short, our breakout on this one worked out really, really well. Got a nice move away. And then it reversed and kind of has come back up since then. But we did get a nice about a 4-to-1 move on that bond setup. So let me know in the comments below if you're able to catch the bond trade. Now we're kind of just in between. There's not a whole lot that I'm willing to do in this region and in this space. We've got a demand area down here, which was the origin of this very strong move up. There is some supply somewhere up in this region, although that supply we've hit a couple of times. So theoretically, you could look at this as kind of a ceiling point. My fear about wrapping my lines around this area is that, will this, if you want to get short up here, you got to stop above that blue line. However, if we make it up to there, will that be the best use of our capital overall, or will that actually just kind of, hurt a little bit as far as what we should do with it, simply because of the fact that we're coming up against resistance, and it's definitely going to be in more of an upward trend environment. Right now, it's a sideways market since it's kind of reached that area. We are technically still in an uptrend, as I don't have a lower swing high yet, but I've got 2 of the same swing highs and roughly 2 of the same swing lows. So the next sliding over would be the Aussie. Now the Aussie, we got a really nice breakout on our Aussie position. As price moved away from that area, take the stop, move it up underneath this line. This was our stopping point. If we took the breakout, price came up and we got a pretty nice move away, just about to our short entry up here. So if you took that one, you've got a nice little run out of that. I'm going to remove these lines at this point. Now we came really close to this area up in here, and so in doing so, by coming that close to it and not getting in, it was already a confirmation entry to begin with. It's now a little bit more precarious heading up into there since we came so close to it. Looking at an opportunity to get long, though, none of these levels here are really great demand areas to buy on a pullback. Every one of these areas seems to kind of touch back into its own self, if you will, and then seems to go higher. And so these levels seem to be retests of one another. I think there's a chance that we'll pull back a little bit in here, and so I'm going to just kind of leave everything as is. I'm not going to add anything to it. This is still a little bit more of an aggressive short. If you decide you want to take it when price comes in, I'm afraid that it's not going to be very effective, especially heading into a weekend. On our euro, so in the euro, we were looking at a little bit of a triangle pattern on this one yesterday, breakout to the upside, and we did get the breakout on this triangle pattern. We were actually looking at it last night, breaking out into here. and it did not break out until just right around the European market open. And we've gotten a little run from there. Now, if you did take that, you want to put your stop. Your stop would be below this area in here, and I would actually take and move it up now underneath those last couple of candles. Just simply because it looks like we're coming up against some resistance at this point. But once again, in between areas of demand and supply, not a whole lot in there to do. And then same thing for the Canadian dollar. I feel like I'm repeating myself, but same thing for the Canadian dollar. Last but not least, in the pound and the yen, you'll see something very similar to what you see pretty much everywhere else. We are between levels of demand and supply in the Great British Pound as well as in the Japanese yen. Both of them are sitting right there between fairly good levels of demand and supply, where we may see a breakout above here, and you could get on the Japanese yen a breakout above this level in here, as it looks like that that price pattern could well be forming. But remember, those can break out either direction. So all in all, as I step and take a look at, take stock of what's going on this weekend, I don't see a whole lot of great opportunities heading into the weekend. And this might be one of those days where you just sit back and let the markets do their thing if it doesn't fit your rules. There are a couple of things out there that are a little bit more higher risk, lower probability, but they also they come with them some pretty big rewards if we get a big runner on one of these breakouts, right? The gold, the crude oil, the S&P markets. There are some things out there. So just be aware of what's going on. See that we can have gap risk over the weekend. And if you hold a futures position over the weekend, don't forget the rule of, do I want to hedge using options? If you decide you want to hedge using options, it's really, really a useful tool to make sure that you are secured. So hope everybody has an absolutely amazing weekend. I will be back next week. And now next week I will say that I'm on vacation. So your daily market commentaries may come out at a different time of the day than you're used to. I will still do them, but I will probably do them at a little bit different time of the day. And I'll be quite honest, I think I may want to sleep in a little bit. So they may come a little bit later next week. But for those of you that are Traders Army subscribers, we will certainly still have our live trade room on Sunday night. And I hope you guys all have an amazing weekend. Talk to you soon. Have a great day. See you.